Welcome, everyone. Welcome.
Thank you.
All right. Hello, everyone. My name is Bari Dube. I'm the training specialist with Grounded Solutions Network, and welcome to today's webinar, Deferring Program Fees, COVID-19 Considerations. So Grounded Solutions works nationally, connecting local experts with the networks, knowledge, and support they need. We promote housing solutions that will stay affordable for generations so that communities can stabilize and strengthen their foundation for good. So today, if you're new to Zoom, I want to let you know that you can use an Ethernet cord or sit as close to your Wi-Fi router as possible for best quality connection. Please mute your video and mute your audio unless you're asking a question. This webinar is being recorded and it will be sent out to all the registrants, so you will get a copy of this. If you have ongoing issues, you can consider dialing in, and if you're on a phone or tablet, sometimes the options are different. And to set up your audio, we connect that you join through computer audio by selecting the computer audio button at the top of the pop-up window. And so at the bottom of your screen, you have a lot of controls. So like I said, you please mute and stop your video. And then if you click on participants, you'll also have features where you can engage with us today and also use the chat button anytime if you have any questions. And so, like I said, if you click on participants, you will be able to see these options. So feel free to raise your hand at any point if you would like to get called on to ask a question, or if you have any reactions, yes, no, this is great. We're happy to have those as well. So we hope that you guys will engage with us. And lastly, again, use the chat box to ask questions and raise your hand if you want to unmute yourself. We only have an hour, but we do want to make this as much as a collaborative learning space as possible. And now I'll pass it on to my colleague, Jenny Gaynor.
Hi, everyone. Good morning or good afternoon. I am Jenny Gaynor, the Capacity Building Manager at Grounded Solutions Network. And so I'm excited to be here today and review our agenda and really get things started. So after these initial agenda overview, welcome, and introductions, I will present a little bit more in terms of setting the stage, some background on thinking about our work in the context of COVID-19, as well as just thinking about program and ground lease fees in general. And then we are so lucky today to be joined by two additional practitioners. We have Dev from the Housing Land Trust of Sonoma County and Ed coming to us from Pittsburgh, the City of Bridges Community Land Trust. They're each going to give a really short presentation covering exactly what they were thinking about and what they have gone through in order to defer or waive their monthly fees for the homeowners in their portfolios. And we're going to have some opportunity then for lots of questions and discussions because as we'll talk about, there's probably no single one solution that's going to be right for all of the communities they're working in. So that is our plan for today. And as Virgil said, the chat is always open if you have any questions or clarifications in particular. And so there next, I will ask you to warm up your chat fingers and introduce yourself. It's always helpful to know who all is here, especially because we're trying to facilitate that kind of discussion. So please take a minute to type your name, your organization, your location, if that's not always apparent, and then just for some more context, especially related to today, what's your current program or ground lease fee amount and frequency? And while folks are getting warmed up and starting to type those things in, I will share a little bit more. I think you'll have remembered you answered a couple questions for us when you registered for the webinar, because we were trying to get a sense of what's going on in your portfolios right now. And so more than half of you are not currently waiving or deferring fees. And so I think maybe that's why you're here. You're interested in considering it or talking it through. And so then a little less than 20% already had a policy in place mainly for deferring their monthly fees. And then around 8% each folks were working on waiving and deferring, and then also just plain old waiving the fee. So I see things are starting to warm up in the chat. People are introducing themselves, but if you're like me and as soon as those prompts go off the screen, you're like, what was I typing? I wanted to offer one more time that we'd love for you to introduce name, organization, location, and your current ground lease fee and frequency. So thank you all for joining us today. Excellent. And so now I'm going to share a little bit more about our work in the context of COVID-19 and just the current time in general. So I think this probably feels apparent to you all, but I just want to acknowledge we are working in really challenging times. We're working in the midst of a global pandemic, limiting access to social networks and needed medical and wraparound services at times, in addition to the health and economic losses. And we know that these losses and impacts are not hitting everyone equally. They're disproportionately impacting households of color and many of the people that we're serving in our work. And even now, we're working in a different context than when we started planning this webinar. At that point, we were seeing reopenings, and as of today, we're seeing these increasing cases in a number of states and regions. So I think it's just helpful to keep in mind when we're thinking this through, we're all operating in slightly different contexts, and it's a fluid and ever-changing situation. And then I want to acknowledge that we're also working in a moment of increased national consciousness of police brutality against the Black community, just one of the incredibly harmful impacts of the pervasive white supremacy culture in our country. And these dual and intertwined crises really mean that in this moment of increased need and shrinking resources, many organizations like yours are also intensifying your focus on racial justice and dismantling white supremacy culture, while also setting up systems for working remotely, facing unexpected staffing shortages, maybe due to coworkers' illnesses or overlapping roles as caretakers and employees, or just trying to balance mental health with past and present trauma. So it truly is a lot, and I want to acknowledge this and thank you all for joining us. And as a reminder, as Bardella said, we're going to be recording this. We're trying to make it a resource because we know not everyone who's interested could join us live. So please participate as you're able. And I hope that this and our future COVID clinics or COVID considerations webinars are really going to be a good resource for you and your work right now. And so, getting more into some of the data that we're seeing as well, we know not only that the COVID-19 pandemic is disproportionately impacting Black households and people of color in terms of health, we also know that there are historic differences in access to homeownership and the related wealth building opportunities, including the 2009 foreclosure crisis and that kind of near past. So we were intuitively anticipating this, but now we are starting to see that data to indicate how households of color are facing more housing insecurity as a result of the pandemic as well. And so on the left, you can see two graphs from the Urban Institute showing that fewer Black households were able to make their mortgage payments in May, and that more Black households had slight or no confidence in making those payments in June at the time of the survey. And then there was another survey we found back in early June that was showing that 72% of African-American households and 76% of Hispanic households were expressing concern that they would lose their housing during the pandemic without additional support, in comparison to 43% of white households. And just overall, all of those numbers are really scary for our field, and just show that our interventions and the work that we're doing is really essential. But that differentiation between the impact on households of color perpetuated and made larger in this current crisis is a real area of concern that we're thinking about a lot in this time. And so we did think about these impacts and concerns specifically on programs within the shared equity field as well. We did complete a member survey back in May of this year, so these findings are already out of date, but I think, again, these are the themes we were really seeing, those concerns around organizational financial sustainability, making sure that you're able to be there to provide the stewardship and commitment you've made to your homeowners. People are trying to provide those critical frontline services, but are facing budget shortfalls, staffing changes, and those kind of impacts around how do you transition to some of these things that are going to be safer in this pandemic environment. People are trying to maximize efficiency. Again, with that financial and potential staffing crunch at times, they're trying to do more, sometimes with less. Thinking hard about how to prioritize really important advocacy in this work, like seeing those local and state policies that might be critical to supporting either your homeowners and their success or just your work in general. And then as we're seeing, like, things are consistently changing, you're picking up on trends, you're seeing how things are happening in other communities, and you're trying to adapt and evolve your work to make sure you're able to meet these needs. And so all this to say, we're really just facing these layers of crises right now, and it's important to try to hold all these things together as we design our responses. We know that the ground lease or program fees are really just a small part of your response and your support for your homeowners and for your communities. But when we did get that member survey back, we saw that there were a lot of members looking into it, and it felt like a good starting place for a series of conversations about how the COVID-19 pandemic is impacting shared equity homeownership programs, in particular across the country. So I'm gonna jump in a little bit to talk just about program fees in general and some of the theory and underlying work below them. And so just setting the stage, common language. The basics are that many shared equity homeownership programs collect regular lease or program fees, often on a monthly basis. The details are all laid out in the legal agreement between the program and the homeowner. And the fees often serve two functions. One is a stewardship function. In the classic kind of CLT model, you think of the ground lease fee as an opportunity to both fund your operations and have a transaction between the ground lease holder and the CLT, but it's also providing a touch point, like a point of interaction. It's often called the canary in the coal mine, where if you see that your homeowner isn't necessarily paying their fee on time or in general, it's a good reason to check in on them and see what might be going on, especially if there's something that you can do to support them. And so these monthly fees really vary widely. I have heard as low as $5 a month and up to $100 a month. And I didn't get to scroll through everyone who is answering, but I do see, you know, there's a lot that kind of settle in that like $35 to $50 monthly looks like. And so then some tips when you're thinking about these fees in general. You're going to be following your legal document parameters, of course. Often your legal document is going to set some like boundaries around late fee amounts and general fee increases. You also want to be making sure that you're considering all of those fees in your affordable pricing methodology and building in a buffer that's going to allow for that fee to increase potentially over time. You'll also be developing policies and procedures to collect those fees. As simple as it might seem, there tend to be a lot of steps along the way, especially when you start thinking about the steps that your program is going to take, your program staff is going to take when a payment is late. You know, who do they notify? What comes first? A phone call, an email, a letter? Like, what is the order of all of these things? And then you're really thinking about that cost versus benefit when you're getting into that enforcement actions, or what steps you are taking if fees happen to be late. Just like, what are the steps and what are the order that's going to be most beneficial to the program. And so then layering on the basics and getting a little bit more nuanced, I think that when you think especially about programs with various size or portfolio types, thinking about whether your systems are reasonable for staff in terms of the time required to manage them. There are programs out there who I think look at opportunities to I was talking with a program that had one of those really low fees on the lower end, and they actually collect their fees on a yearly basis then instead of collecting $5 every month. So when you just think about the cost benefit again, and the amount of work your staff is doing and your homeowners are doing, thinking about whether you have reasonable systems is really important when you're considering your monthly fees. And then one of the other things I've often heard is, you know, the fee comes into accounting and then I get a report maybe a month or 2 months later. And so that means that your monthly fee can't really do the stewardship function that you were hoping it might do. So again, thinking about exactly how you track payment timeliness and all of that information in order to take the action that you hope that you're going to be able to take to support your homeowners. And then questioning, are you really implementing your enforcement actions consistently when they're needed? And so I think that goes back to setting a firm like policy and procedure. It's like if someone is late, you make a phone call and then you send an email and then you send a late notice 30 days later, or what are all of those steps? And then is there a certain amount of overdue fees that's going to trigger a next step, like an attempt at an in-person meeting, or what kind of workout might you have before you would consider actual enforcement of your ground lease or legal agreement? And then I think it's really important to be considering how your fee collection policies and procedures, those potential enforcement actions, are going to impact your homeowners, specifically your homeowners of color. Is there a chance that something that you're doing, something that had seemed baked into your policy or procedure or your legal agreement, is actually going to have a disproportionate impact on your homeowners of color? Like often people consider small claims court as the step for enforcement actions. And so what does a small claims court decision, how does that impact your homeowner long-term? And is there a chance that it would be impacting a white homeowner differently from a homeowner of color? And making sure you understand that and can course correct for those kinds of impacts is really important as you're thinking through these kinds of fees. And so then when we're thinking specifically in this context, I know, of course, like homeowners are losing income out there. We're seeing a lot of job loss or hours reductions or hours fluctuating as things are opening and closing again. And then like just the need for social distancing is complicating some personal outreach and daily activities. Like if you might have stopped by to check on someone in a small portfolio, you can no longer do that as easily. So changing some of those systems. I know there's a program way that like where I think people had to drop off payments in person at the office. And so like changing those systems in the context of COVID-19 is going to be important. And then finally, I think a lot of what people were saying is that their homeowners are getting like information overload, and some of their kind of systems and basics might be falling through the cracks. And thinking about like information or misinformation. I think a lot of programs out there are serving as a basis of solid information for their homeowners, but at times they're seeing like all of this information about mortgage forbearance and everything else. And how do you make sure that like your information about this monthly fee and your program in general doesn't really get lost in the shuffle? And so then again, in an effort to come to some common language, I wanted to highlight the difference in thinking about deferrals versus waivers. When you're thinking about a deferral, like you are expecting to collect those monthly fees eventually, so it's just going to be later down the road. And a lot of programs, it sounds like, have varied, whether they're setting up a standard payment plan or a custom payment plan with each homeowner that's going to be accessing a deferral. And then like in addition to whether it's a payment plan or maybe there is a plan to just kind of repay a certain amount of fees at resale, which is a common opportunity that you have in the model ground lease. And then when you're thinking about waivers, acknowledging that like if you are waiving the fees, it means that you are not going to be collecting those fees. It's like a revenue lost for your program. And then thinking about, well, there's waiving the actual monthly fee or there's waiving late fees, because there is the chance that like fees could be deferred, but like late fees still accrued and incorporated into a payment plan. So it's a kind of a whole number of levers you could be playing with when you're thinking about how to structure the choices for your program. And so then I wanted to offer a few examples in talking with a whole bunch of programs and getting Dev and Ed to join us today. We heard a lot of things, like people were starting with policy changes, right? A lot of programs were going to their board right away requesting approval of a new fee deferral or waiver plan, or kind of getting their input as they're making those changes. Some programs really were using their existing policy, especially if their portfolio of homeowners in particular didn't seem to be getting immediate economic impacts based on the pandemic. They were really leveraging their existing policy and not making changes as of yet. And others really focused on the other avenues for keeping housing costs down. Like, your fees might be a really small portion of your homeowner's monthly costs. So they're working with lenders on forbearance, they're working with refinancing to access lower mortgage rates, lower those monthly costs in a different way. Or I've heard some lenders are out there offering interest rate reductions. And so the program is helping to make sure that their homeowners are able to access those benefits. And then when you're thinking about some procedures, sometimes programs are requiring that documentation of reduced hours for lower layoff in order to qualify for a special kind of deferral or waiver that's outside of their typical process. Others might not require any documentation beyond that specific request. Sometimes people were requiring that individuals actually apply for unemployment benefits in order to access deferrals and waivers. And I would note that's not receive those benefits, but actually to apply for them. And the folks who reported that were saying that they felt like that actually increased their homeowners' access to those UI benefits because they might not have had, they provided some support and encouragement in really getting people to apply as soon as they could. And then others were really mirroring that mortgage forbearance process. Like, that was one big process that people were going through. And so if a homeowner was already managed to be in forbearance, then fees could automatically be waived or deferred based on that work. And then finally, programs were really thinking about establishing new timelines. They were creating customer payments plans for each homeowner, or some of them were providing a standard repayment plan, just saying you might get these 3 months deferred and then you need to pay it back over the next year or two. And then others were limiting that time frame under which the special deferral or waiver policy might apply. And so I think, like, I heard generally a range of, like, people were setting the policy for sometimes as short as 3 months and sometimes as long as a full year. But again, we really don't know how things are going to continue to be changing. So thank you all for bearing with me on that like context setting and going over some of the basics, so we do have shared language and understanding. But I'm curious, especially in those examples I was sharing at the end, is there anything else that your program is doing or considering that wasn't mentioned? Because again, I think really what we saw in our member survey and what we've heard talking to people is there are truly different local contexts, different local needs, and those needs are potentially going to be changing over time. So if anyone wants to chat in anything else that they are doing right now, I think I am a little bit behind, so I probably should keep on going to let Dev get started. But I've got an eye on a chat if anyone else wants to add a little bit more about what you're doing that hasn't been mentioned yet. All right. So Dev, I'm going to let you introduce yourself and share a little bit about the work that you are doing.
All right, thank you, Jenny. Good morning, everybody from Sonoma County, California. And I'm Deb Getches, Executive Director. I'm the founding director of Housing Land Trust of Sonoma County. I've been at this for about 17 years. We've served 100 families and had 16 successful resales. Right now we have 30 homes under construction, another 80 in the pipeline, and we serve most of Sonoma County and are actually expanding to Napa as well. So I am glad to be here today. Jenny, you covered a lot of the things that we do as stewards in the land trust model. And one other thing I would mention is that, thinking about our partners is also helpful. So we work with cities to tap into some grants that were available. And we also have in place emergency funds. Anytime we do anything with an HOA, we make sure that that is money that's set aside if someone has an emergency type of situation, because some of the HOA fees are like over $400 a month, and so connecting homeowners and advocating and securing grants, even if it's through the trust, has been something we've done. our board decided to do a very specific policy for the COVID-19 pandemic around deferral of the ground lease. Before we rolled out the deferral option, we actually started with a refinance announcement. So we sent out a letter to each of our 84 homeowners, and we said, if you have an interest rate of over 3.5%, contact us and let's do refi. And so that was a really great way to connect with families. How are you doing? What's going on? In addition to our monthly connection that we have through the ground lease that we collect. And we probably, I think about 50% of our families did refinance. And so we saved people anywhere from $250 to $500 a month. So the following week, we sent out a letter, and our COVID policy had to have been approved unanimously by our board. That was a decision that we made. And it's a 3-part policy. It's a cover letter, and then there is a verification form that basically asks for people to state why they are requesting a deferral. And then we also had a 3-month budget, so we could see that cash flow. And we decided to just do 3 months to April, May, and June. And we would revisit that if we needed to, further down the line. So we had 2 people who, 2 homeowners who asked for that deferral. And one was a 2-month for April and May, and another one was for 3 months. And then as of July, I am happy to report that everyone is current and we haven't had any more requests. So we were considering extending it, but there's no need to do that right now. Back to you, Jenny.
Thanks, Dev. So here is our quick little summary of everything that Dev had shared, as much as we could get onto a single slide. And I just wanted to open it up and give a minute or two if anyone had any questions for Dev specifically about their process and how it's been going. And this is I should put the elevator music back on, right? For the calming moment in case anyone has any questions.
And I'll also jump in and add at the after both Dev and Ed go, we will definitely have time for Q&A. So I don't know if you're saving your questions, feel free to chat them, or we'll also have the opportunity to use the raise your hand function if you just want to ask a question aloud. So we definitely will have space for you guys to chat. So whether that's now or later, be ready to use your chat fingers.
Yeah. And Dev, I do see one question from James. He's asking, before you extended the option for deferral, were you concerned about the impact to your operating budget? And how did you handle that analysis, if so?
That was an analysis that we ran with the board, and we decided on just doing 3 months in order to be able to sustain that impact if we had very many homeowners request that deferral. And so it's been fine, obviously, since we only had 2 homeowners really ask for that, for a total of 5 months between them. And I also neglected to say that we gave, so the third part, after the verification form, if someone did apply, we have then a repayment agreement, and people have 12 months to pay back that amount.
Yeah, thanks, Dev. That's super helpful. And so now we will continue and come back with more questions, but I'll introduce Ed from City of Bridges Community Land Trust. Ed?
Hi, everyone. Dev got to say good morning, so I'll say good afternoon from Pittsburgh and the Eastern time zone. But yeah, so I'm Ed Nusser. I'm Executive Director of City of Bridges Community Land Trust. We're a relatively new land trust serving the city of Pittsburgh and other communities in Allegheny County here in southwestern Pennsylvania. And so, yeah, excited to be here and talk a bit about what we've done in the face of COVID in our community. So as our intro screen sort of showed there, we are a relatively small land trust. We have 10 homeowners in our portfolio right now. When the shutdown began here in the middle of March, we actually had 7. So we were actually able to close on 3 homes in the middle of a global pandemic. So I'm gonna call that a win. So we're up to 10 now. And then also because 2020 wasn't putting enough on all of our plates, we're also working through our first 2 resales right now in the midst of at least locally spiking COVID numbers. So lots going on here in Pittsburgh. But just for context, on Friday, March 13th, our state shutdown took effect here locally. On Monday the 16th, our staff was in touch with, at that time, our 7 homeowners to check in to see where they were and what they were expecting in terms of employment continuing or layoffs, really trying to be as proactive as possible. By Monday the 23rd, so 1 week into the local shutdown here, 2 of our 7 homeowners had either been furloughed or let go. So our first reaction was to get them in touch with their lenders to make sure they were square on mortgages and that they were, getting the relief and mortgage deferment that they were entitled to. All of this was happening prior to the CARES Act officially being passed and guidance being issued from Fannie and Freddie. So a lot of it was, individual work that had to be done with local lenders. Thankfully, we were able to connect them with direct people instead of 1-800 numbers. And so we're able to provide some advocacy services for those 2 homeowners. But also kind of immediately after that, that week of the 23rd, what we instinctually told to those 2 home buyers was just, look, our ground lease fee is minimal. It's $20 a month. But just to take one stress off of your plate right now, you don't need to worry about paying us while you're unemployed. And we're going to figure out, at that point, we'll figure out with you what that looks like. And so in early April, what we came back to them and said was, we will waive your ground lease fee payments through the remainder of 2020 or until you're reemployed, whichever occurs first. A couple of things let us do this. First of all, as I said, we were a small portfolio at that time, 7 homeowners, and our ground lease fee is relatively low too. At $20 a month, we had $140 a month coming to us from our entire portfolio in lease fees. So losing, $40 a month wasn't going to create a budgetary impact of scale for our organization. And then secondly, we looked at it and said, even if we have to extend this to our entire portfolio, our exposure is limited. Again, with only 7 homeowners, it wasn't going to be a significant financial impact for our organization's budget. So our process was fairly simple. We asked our homeowners to send us documentation on their reduced employment, either written notice of being furloughed or being let go. Shout out to Homekeeper, because we're keeping all of that documentation in all of our home buyers' Homekeeper files. And then we also executed a really short half-page ground lease waiver agreement because the ground lease is part of the contract. The ground lease fee is part of our contractual obligation in the ground lease. We wanted to have a legal agreement recognizing that, yes, as a homeowner, you owe our organization this monthly fee, but in light of COVID and your unemployment, and because we value your security and stability, we're going to waive the fee through the remainder of 2020 or until your employment returns. And there is, frankly, some honor system around, when your employment returns. But again, being a small organization, knowing all of our homeowners fairly personally, we felt like that was something that we could trust our homeowners to be honest with us about.
Awesome. Thanks so much, Ed, for sharing your experience and the thought process you all went through to get there. And so similarly, I will open it up for especially like clarifying questions. I think, you know, you addressed the question that James had posed to Dev pretty well, just like when you were thinking about your budget, you do that math to think about it. And I will delay for another minute or two in case we have a few other specific questions for you. But really, what we have left for everyone is an opportunity to talk and to discuss. So I think opening it up if folks want to raise their hands, type chats in, and we have really open time to ask questions for our presenters, to ask questions for your other colleagues on the line. And then, you know, I would love to hear from folks if you're out there thinking, well, that's great that these programs could do these things, but this is what's standing in our way. Like, I'd love to hear what some of those obstacles people might be facing, and offer our collective brain power to share some thoughts on them. When you're thinking specifically about your monthly program or ground lease fees, or other challenges that you're facing as you're trying to adjust and adapt during the COVID-19 pandemic. Subardilla, did anything come in the chat or anywhere else that you see it?
No, I don't see anything in the chat, but as always, feel free to do that. And as I said at the beginning, if you scroll down to participants at the bottom of the screen, you can also use the raise hand function, and then I'll call on you to go ahead and ask your question out loud if that's easier. So I do see a comment from Adriana. I'd love to know who hasn't made any changes. We haven't had any homeowners reach out to us at the City of Flagstaff, so we haven't had to as of yet. So feel free to answer that in the chat, or keep the questions going.
No, and then I'm curious, it's like I have a question back for Adriana. So do your homeowners typically like proactively reach out, or is part of your concern that people might not be proactively reaching out in this moment of a lot going on in their lives? And I saw Adriana said that homeowners do typically reach out. And so I think that that's good. If you've got those open lines of communications and people aren't accessing them, that seems like a good sign. But I did, when I was doing the calls and the emails to see what other programs had done, often people had started with some form of outreach or information sharing, especially in an area where your program is seen as a trusted resource. You know, whether it was information about the CARES Act or mortgage forbearance, or another local program that your homeowners might have an interest in, or like Dev doing that initial outreach to communicate the ability and opportunity to refinance. A lot of times that kind of proactive outreach was getting things started. All right, I'll stop talking. I see questions coming in.
Awesome. And a couple more comments and questions. So Erica said the employment of our homeowners have not yet been impacted as of yet, but I want to be prepared to act if it is, so this is helpful. I'm glad to hear that. And then James asked, how are you all thinking about the ground lease fee being that early indicator for delinquency risk now? Canary /coal mine. It's been a major selling point of the fee, even at $20. Is it playing out that this is actually kicking off conversations for your CLTs right now? And thank you for that question. Feel free, everyone with programs, to respond to that in the chat. What else? Jenny, did you want to make any other comments around that?
Well, I think I'd love to just hear from Dev directly. I know that it was only 2 programs that came back for you all, but is that how you're thinking about your ground lease fees? Like, are you paying special attention right now if anyone just happens to be late without requesting a deferral first?
This is Deb. Yes, I 100% believe that the function of the ground lease fee is to really indicate the health and well-being, at least financially, of our families and also otherwise. And we have always had dedicated staff to send out a personal email to each and every one of our homeowners every month. And during our home buyer education, we talk about the fact that we are here to steward, to be advocates. And, you know, I say things like, if you even think you see the lights of a train coming, you think something's wrong. It doesn't have to be wrong, but you just, you know, have this feeling, call us, because I have all day to work on this. And, you know, your success is what matters the most to us as a homeowner. And so the ground lease invoice, you know, I tell them it's going to be the same. So it's not that we know that you can't remember what it is, but this is how we're going to keep the communication door open. If you're busy, you know, attending to your job, the kids, whatever, and you have some question about the land trust, it's going to be easier if we're just in your inbox and you can, you know, send that question out to us. And over the years, it has been a fabulous tool because that relationship stays warm month in, month out, year in, year out. Because by the time we get to the close of escrow, we have a really terrific working relationship with our families. But they want something, right? They're excited about their house. And after that sale, how do you keep that relationship still warm? And so that's how we do it. So if somebody misses a ground lease fee, you know, I just pick up the phone and say, how's it going? And it's not a shock to hear from us from the land trust because they hear from us every month. And, you know, oftentimes it's, oh, my mom's been ill or this, that, or there is indeed something wrong. Because if that doesn't get paid, what else isn't getting paid? And getting in front of issues is really important. And it gives you a chance, I think, as a steward to really treat your families with dignity and offer support without it being, you know, so out of the blue.
Thanks, Deb. And Ed, I'm curious, similarly, you know, are you keeping that close eye on your other 8 homeowners, like for potential late payments, or how are you seeing this play out?
Yeah, and I think, I mean, that's a great question, James. And I think, you know, you kind of hit the nail on the head, and Dev did as well. But from our vantage point, you know, so we offered the ground lease fee waiver after folks contacted us saying, hey, I need help on my mortgage because I was just let go. But we also extended that, and, you know, we continue now to check in with folks on probably a bi-weekly basis. Things have kind of been slowing down here, and we've been returning a bit to normalcy, or whatever normalcy looks like right now. But right now, our public health concerns are actually getting much worse, very, very quickly. So we're actually kind of speeding up and shortening the time span between when we check in with folks to make sure everyone is still on solid footing. So again, we're trying to be proactive. Everyone in our portfolio knows that if they need this waiver, that it's available to them. We've made that clear. So we are a little bit relying on folks to reach out to us, but we're also checking in on a regular basis to make sure that employment hasn't changed, that folks haven't been let go. And really our first sort of course of action is making sure people are on solid footing with their mortgage lender and are getting the relief they're entitled to, either through the CARES Act or through things that banks have rolled out on their own for some of the portfolio mortgages that we have. So yeah, it thankfully is, like Dev said, you know, it's constant contact and making sure that everyone's, doing okay financially, at least right now.
Thanks, Ed. And so Bartle, I'll ask, did anything else come your way? Should we pose, we did collect some of the questions from you all when you were registering for the webinar. And so I think one of the things that I was curious and I saw come up in the pre-course our pre-registration survey was just what's next on your list for supporting your homeowners in this continually changing environment. And so Ed, you were speaking, I think, a little bit to that. And so I'll pass it back to Dev to say, what's next for you right now? Or has it gotten, feeling pretty quiet in your work?
We continue to refinance homeowners, and what's next for us is that we know what field of work our homeowners are in, and we know from experience who our more fragile homeowners are, and so it's my intention to pick up the phone and just call and say how's it going. And take the temperature that way, I think that, if you haven't done the refi option, one of the reasons I wanted to do that was because I was thinking of a way to connect, but also give a sense of control that really literally added up to our homeowners. We know the homes are affordable to them because we make it our business to make sure that the ratios all work out and we front load that subsidy. But at the same time, obviously they should refi if they can, but it was a good exercise in here's something we can do together, we can have that human connection, and we are preparing for the future. So you're okay now, but if you lose your job or your hours get cut or what have you, you have an opportunity to save a little bit. And so I think being mindful of what we can offer in terms of giving people control over their finances and just talking things through about work is a good thing.
Yeah, that's super helpful, Dev. And Ed, I will ask the question to you too if there's anything else on your list, but I also want to ask it to all of the participants as well. Both, what's next for you and your work, and what might you like to hear about next from us at Grounded Solutions? We are hoping to do a few more of these webinars through the end of the year, just focused on really like your responses and your work. And so if you have some what's next in terms of things you'd like to hear, that'd be great. And Ed, any other items on the next things you're going to be doing besides trying to do your first 2 resales in this environment?
Yeah, besides the first 2 resales and marketing 3 homes that we're under construction on right now, I think we're doing our best, to really try to understand what we can do to create ties between our homeowners and each other, homeowners and us, homeowners and the broader community, during this time of, social, physical isolation from a lot of people. So we've done 1 Zoom happy hour for our homeowners. It's like a homeowner get together. We would have done a potluck at this time of year, but obviously potlucks and COVID aren't a good idea. So we had a Zoom get together for our homeowners. We're trying to think through what, staying in touch with all of our community partners looks like on the ground. We're also, I think, as an organization, thinking through what the broader idea of housing justice and community stability looks like in the face of COVID, right? How do we as an organization respond to the economic instability and the housing and economic injustice that this pandemic is revealing? So, you know, we're doing some organizational thinking about just what our role needs to be within our communities moving forward, but also for our homeowners.
Awesome, thanks, Ed. And I'll also jump in. Anna asked a question. I would love to know more about the work you did to help homeowners refinance. Did you know their interest rates already? How much work did it take on your end? And I know, Deb, you talked about this earlier, so feel free to jump in.
Yeah, sure. We formed a plan and a process before we sent out the letter. So I really believe in efficiency and in replicating things because we are still a small staff, and you know it's important to keep things fair and even as well. So what I did was I reached out to our preferred lender and said, okay, I'm thinking about doing this, and she's working remotely, right? So we have to figure that out. And we just basically came up with a plan of what the process would look like, which is we would send a letter saying if you are, you know, if you have more than 3.5% in interest that you're paying, then reach out. And I had already prepared an email with the instructions that my lender said would work for her. And you know, a warm and friendly, of course, but then it was call the lender. This is the number, leave a message. She will call you back and set an appointment. And when you sit down to talk with her, make sure you have your mortgage statement in front of you. And I will track this on our end because the land trust has to approve this, this refinance. And so we were able to be really super efficient with that. And of course, we have other lenders that our homeowners have the option to work with whomever they choose. And so, you know, we did our stewardship there. They have to make sure they go through the Fannie checklist and so on. So it's a little bit more work, but that's the way it is, you know. But it was fairly smooth and definitely worth it.
Thanks, Deb. And I see we got a request. The city of Bridges be willing to share a sample of their land lease fee waiver repayment. And I'll just add that we can probably talk offline about that if necessary, but generally every situation is different, especially if people are experiencing COVID very differently. So I think that for each community, it really do have to figure out what works for each community. So I will just see if any more questions are coming in.
This is Deb. I want to address that for a moment. The standard ground lease does say that you have the right as the CLT to, you know, to waive fees and so on. So it's actually already in our ground lease that everyone has signed.
Thanks, Deb. All right, well, we don't want to beleaguer anything. We do have about 5 minutes left, so go ahead and sneak any last minute questions if you have them, but I'll go ahead and run through the resources and next steps and give you guys back the rest of your day. So briefly mentioned in the standard section 6.2 purchase policy and requirements, you can find stewardship standards for affordable ownership programs. And I think as mentioned before, the 2011 model ground lease commentary article 5 also talks about some of what we brought up today. And then also as Grounded Solutions, we are a membership organization. So if you ever want to become a member, you get online training institute discounts, priority help desk access, network of peers, startup CLT programs, and much more. And I'll also add, as far as webinars, we do have a couple more offerings coming up in August, and you guys will be getting in your follow-up email. Everyone will get the recording, but also we are offering a webinar and a new training course. So please be on the lookout for the email you're going to get tomorrow morning, keeping you up to date on future events just like this. So with that said, I did not see any further questions, and I just want to thank Deb and Ed so much for taking the time to chat with us today. And is there anything else I missed?
Nothing on my end, and I will just reiterate our thanks for Deb and Ed and everyone who chatted questions. We appreciate you and your time, and keep in touch if there's a topic you'd like to hear about next.
Awesome. Everyone have a great day. Bye-bye.